just reported another weak quarter in Q2. Now, for the first half of the year, the revenues are down more than 30%, the profits are down almost 60%, and the company has now achieved only 40% of their FY17 guidance on new sales volume so far. And the full impact of demonetization is yet to be seen. Irfan Razack, the Chairman and Managing Director of Prestige Estates, joins us now to talk about that. Mr. Razack, good morning. I wanted to first ask you about your launch volume guidance for the full year. In the first half, you've achieved just less than 2 million square feet, and your total guidance is 10 to 12 million square feet. So that's just about 20%. Do you think it will be hard for you to meet the guidance for the full year because of the weakness that we are seeing in the sector?
See, the launch guidance, though we decided in the beginning of the year, with the advent of implementation of RERA just around the corner, we believe that we felt it would be better to be completely RERA compliant and launch any other new project. So hence, in that endeavor, the company took a decision that we are only going to sell the current inventory that is there with us, and that's why the launches have not been that heavy. Having said that, even this current quarter, there won't be any new launch, but I think the last quarter should see a couple of launches both in Bangalore and Chennai. But then that will be where everything is compliant towards RERA, and then there won't be any sort of issues if the project is launched. Having said that, I think company has done pretty well in terms of sales, considering that they were only handling the current inventory that they had. And if you look at the quarter-on-quarter sales, we have done 757 crores worth of sale in this quarter, the quarter gone by, and that is much higher than the previous quarter in the previous year. So I believe that we are quite strong there, though like you rightly said, the guidance is only 40% achieved, and this quarter is not going to be that great. Considering the confusion that is there in the people's minds, they have, yes.
Okay, so would you cut your guidance for new launches?
We'll review, because I believe the last quarter again will bounce back, and if you see, typically the last quarter of every financial year is where we've got the high jump, and with the couple of launches that we have planned, those should take care of whatever shortfall that has happened in the current quarter. More so because this quarter, whatever that we've not done, will obviously get done the following quarter, because see, now today, in the last couple of months, the customer has got total confusion in the mind, and there's a lot of diversion, and they've got much more important things to attend to. They'll come back, they definitely want to buy a home if they have the ability to. And since the money has gone back into their bank accounts, obviously they'll come back with a bang, and I look at the last quarter of the year to be fantastic. But right now, the September quarter has done well. We'll wait and watch how December quarter pans out.
Okay. Mr. Razack, good morning. What about commercial real estate? How's that shaping up?
See, commercial real estate has so far done extremely well. In fact, we are in a situation where it's like, you know, the nil vacancy, very single-digit vacancy is there. So that way, I think we have done extremely well. Now we are trying hard to sort of complete the projects that are on hand. Both we have got two retail projects, one in Mysore, one in Whitefield in Bangalore. These two are, the team is working hard to see how quickly they can complete it and start trading. We're also doing a couple of office buildings in the CBD, which we are now trying to complete, and there's enough demand for leases for those buildings. And of course, we are also working on several other tech parks, which won't happen in the next 2 quarters, but will certainly happen in the next 9 months. So having said that, there is demand in the commercial segment. It goes unabated, and that's a good sign, because more demand means more jobs. We only are hoping that the demand will sustain, and in the long term pan out good for both retail as well as residential.
But Mr. Razack, your leasing volume target as well for the full year may not be achieved. You've only achieved a little over 20% in the first half. and your total target is about 2 million square feet. Would you want to scale that down?
See, as I said, these four developments are, we're just trying to get them ready, because as far as we are concerned, leasing is not an issue. The only thing is we have to complete these projects, and in case they don't get ready before March, obviously we'll have to scale down the guidance. But then if it doesn't happen in March, it obviously will happen in April. So it's a question of miss by about a month or two, or a quarter maximum, and that's what's going to happen. But whatever we are now building is like pre-committed. It's already, the leases are in place, the customers are in place, but then the yield will start coming a little later because of the non-readiness of the development.
Mr. Razack, is completion likely to get postponed because of, problems with paying labor and labor not being available sometimes because they are, as you say, in queues?
See, labor, fortunately, yes, there is a problem with the smaller and medium contractors. But fortunately, working with the larger contractors, in fact, I did call a few of my larger contractors when this thing happened. And they told me, sir, we moved to, systems like SAP and all of it. And we opened accounts for all our labor, and it was like a premonition as far as they were concerned. And I'm happy to say the L&Ts and the JMCs of the world have actually, and NCCL, these guys have already got bank accounts for the laborers. But of course, there will be a lot of these daily wage earners, and they have been affected. And we've tried to see how the impact can be minimalized. But it's another month to go. I think after that things should settle down, and I think it should be business as usual.
Okay, Mr. Razack, thanks a lot for your time today.